So what is the loan to value? Let's go over the purchase side. For purchases, for single families, you could put as low as 15% down. With multifamilies, 2 to 4 units, you could put as low as 20% down. When it comes to 5 units plus, it's typically 25%. Now, I've actually seen a blanket pricing with multiple 4 units at a 20% down payment. It really depends on the lender you go with and the deal itself. On the refinance side, there's 2 types of refinances. There's rate and term, and then there's cash out. Rate and term is basically you just replacing the current lien with a different rate. For example, let's say you had a $200,000 property and the interest rate was 11%. You had a fix and flip loan on it, and then you wanted to do a refinance for the rate and term to get a 6.875% rate on the DSCR 30-year fixed, then you would just do the $200,000 financed. So only the $200,000 gets financed. With cash out, you're actually pulling cash out. So for example, let's say the property was worth $500,000, you have a $200,000 lien on it, and you wanted to do a $300,000 cash out, $100,000 would be the cash after the lien has been paid. So with rate and term refinances, you could typically go up to 80% loan to value. So if the property, for simple numbers, if the property was worth, let's say 100,000, then you'll get 80,000 max. Now keep in mind, majority of DSCR loans don't typically go under 100,000. There are a few lenders willing to do it, but majority of lenders have a $100,000 minimum. With the cash out refinances, you can typically do 75% LTV with majority of lenders. There is a lender out there that I know that can do an 80% cash out in certain areas. Keep in mind, the higher the LTV, the higher the rate. The lower the LTV, the better the rate. Same with the down payment on purchases. If you put a higher down payment, typically you get a lower rate.